The Peter Schiff Show.
Well, it's been a while, I think, since I recorded my last podcast. I was out of town. I was in Las Vegas for several days for Freedom Fest. And then after that, I went up to Vancouver for a one-day gold conference. And, you know, sometimes when I'm traveling, I do a podcast. And, of course, whenever I do, everybody is critical of the audio because I have to use a traveling mic. And I did have the mic with me. And I thought about trying to do a podcast, but I was quite busy. And it didn't seem like there was any earth-shattering news that really, I got to do a podcast about that. So instead, I'm just going to do this podcast today now that I'm back in the studio and we have the top quality audio equipment that I normally use. You know, one of the things I wanted to discuss, I was reading this I guess, a discussion about me on the Kitco website. And I think it was prompted. I did an interview with Kitco when I was at Freedom Fest, and you can see that interview on my YouTube channel. So if you didn't watch it, you could check it out. I think we got about 20,000 views so far on it. So a number of you have already watched that interview. But, you know, it was a typical interview about the price of gold. But I did talk a little politics on that interview. But I think it was that interview that prompted this discussion about Peter Schiff. And, of course, whenever there's a discussion about me, it turns into an argument between the Peter Schiff bashers who talk about how wrong I've been and how little I know, and they don't even know why anybody bothers to follow me because I'm the worst forecaster, I'm the worst investor, you know. And then you do get some Peter Schiff supporters who, no, he's a good guy, you know, I've followed him for a long time, he gets a lot of stuff right, and so you get back and forth. But I just thought I would interject a little bit because I thought one in particular part of it was quite amusing. Although normally, right, when people criticize me, they always want to go back and they want to find a forecast that I made that didn't turn out. And of course, I never claim to be infallible. I mean, when you make a lot of forecasts and a lot of projections, they don't all turn out to be right. I mean, nobody is 100% right on anything that they say, right? The key is, are you right more often than you're wrong, right? And when you're wrong, you know, do you change your mind when the circumstances or the facts change, which is something that I do. But they'll always go back and they'll say, oh, here's a quote from years ago, 5 years ago, and Peter Schiff said interest rates would go up, and look, they're down. Yes, you know, there are a lot of people that had expected rates to go up. I didn't realize that the bond bubble would get this big years ago. Who thought that then we'd have half the sovereign debt trading for negative yields 4 or 5 years ago? Very few people envisioned that, but it happened. But, you know, for the last several years, nobody hears me talking about higher interest rates. I do believe that when the bond bubble bursts, rates are going to spike up, but I don't know when that's going to happen. I've stopped trying to call that. I mean, I don't tell people to short the bond market, even though I think it's going to blow up. I haven't been going on television for the last several years advising people to short the Treasury bond market. None of our clients are short the bond market. Now, I have encouraged people not to buy the long end of the bond market because I do think it's a bubble. I do think it's going to blow up at some point. I just don't know when. But, you know, a lot of things take longer than you expect. But, of course, if you've made enough forecasts, you can always find things that haven't panned out. But what these people always do is they overlook the overwhelming number of things that I've spoke about or written about that have, in fact, already come true. You know, one of the forecasts that I think a lot of people used to make fun of me for was this forecast I made on the show called Southland Today. And if you haven't watched that, I put that up on the internet years ago. It's up there. It's a 2002 interview that I did. And in fact, some of you, if you actually watch that clip, you'll recognize that a lot of the things that I said in that interview were used to form the introduction to the old Wall Street Unspun, which was the precursor to the Peter Schiff Show, which was my weekly radio show that I did on shortwave and the internet every Wednesday night. And a lot of the things that I said in the intro for that were lifted from the 2002 Southland Today interview. But during that interview, I said that I thought the Dow Jones would go down to 4,000. And I forget what I said about the NASDAQ, maybe 500. I mean, it was some really low number. Of course, the market was much higher than that when I made the forecast. And now, of course, people will go back and look at that and say, Peter Schiff, what an idiot. He said Dow 4,000, and look, it said 17,000. You see, he was wrong. Now, of course, a lot happened between 2002 and now. And in fact, what did happen is that after I did that interview, the market fell precipitously. I think the Dow did drop another 25, 30%. The NASDAQ maybe even more, right? So the market was in the process of falling, and I thought it would, fall a lot more than it ultimately did. But what happened between that interview and the time that the market turned around was Alan Greenspan slashed interest rates down to 1%. Now, at the time I did the interview, I didn't know he was going to do that, right? I thought Alan Greenspan would be smarter than that. I didn't think he would be that reckless. If Alan Greenspan had not slashed interest rates down, then I think my forecast would have been correct. I think the markets would have gone a lot lower had the Fed not backstopped the market and prevented the decline. But once Greenspan did that, I changed. I didn't keep saying the Dow would go to 4,000. I reversed and I became bullish. And I became bullish when the market was still quite a bit lower. I think by the time I got bullish on the U.S. stock market, the Dow was still probably 20% or more lower than it was when I did that interview. But of course, when people go back and pull that interview, they don't realize that. They just act as if I was bearish on the stock market for the entire time. Look, if you saw the Southland Today interview and you sold all of your stocks based on listening to my talk, if you'd have followed me continuously, you could have bought all your stocks back cheaper than when you sold them. And of course, though, I didn't tell people to buy U.S. stocks, even though I thought that the market would go up, because I thought it would go up because of the Fed. And so I thought gold would go up more than the market. I thought foreign stocks would go up more than the market, and they did. In fact, if you actually watch the entire Southland Today, there are so many things that I got right from that 2002 interview relative to today. I told people to buy gold. I told people to buy oil. I said the dollar would go down. The dollar index was well over 100 when I did that interview, maybe 110 to 120-ish. I mean, it went down to 70. The price of gold was probably still below 300 when I did that interview, and I said it would go up. In fact, measured in terms of gold, the Dow fell a lot lower than 4,000 if you wanted to price it in gold. But what happened was that the Fed did something that I didn't expect when I thought the market would go down a lot more. But once I saw what the Fed was doing, then I changed. I said, okay, the market's not going to go this low because the Fed is printing all this money, and so it's going to prevent the nominal price of the market from going down. But they just want to go back and look at that prediction to try to say, oh, you see, he doesn't know what he's talking about. But one of the things I thought was funny is there was somebody on there, or maybe a couple of people on there, that were criticizing me because I said the Fed wouldn't raise rates, right? Oh, Peter Schiff was out there all during 2015, 2014. The Fed's not going to raise rates. They're bluffing. They can't raise rates, right? It's more likely that the space aliens are going to invade us, or, a zombie apocalypse, right? Then the Fed's going to raise rates. And look, the Fed raised rates, therefore Peter Schiff was wrong. Now, I mean, that thing is so ridiculous. This is where people should be giving me a lot of credit, not trying to criticize me for getting it wrong. Because if you go back to late 2014, every forecaster from every major Wall Street firm, every bank was predicting that in 2015 and 2016, the Fed was going to hike rates maybe 6 to 8 times, right? The people that thought they would go slower, maybe, 3 rate hikes in 2015, maybe 3 in 2016. But there were some people that were saying the Fed was going to raise rates every quarter for the next couple of years. So, people thought, okay, maybe somebody was like 5 rate hikes. A lot of people were 6 rate hikes. Some people were 7 or 8 rate hikes, right? Everybody was expecting a lot of rate hikes for 2015 and 2016. In 2014, I was saying no. I was saying 0 rate hikes. The Fed's not going to hike rates. They're just bluffing. My prediction was no rate hikes. The consensus, again, as I said, was somewhere between 6 and 8 rate hikes for 2015 and 2016. And this guy is trying to say, or these guys, that I was wrong because the Fed actually raised rates once. Well, I was a lot closer to the actual hike number than everybody else. In fact, I think I beat everybody. I don't think there's a single strategist or economist or forecaster who in 2014 said that the Fed would only hike rates twice, right? Because I missed it by one. I said 0 and we got one hike. So the only way somebody could have been as close to me is if they guessed one hike, right, or maybe two hikes, right? If they guessed one hike, they nailed it. They beat me. But if you got two hikes, well, you tied me. But unless, of course, you want to go by the old Price is Right rule, right? Because the Price is Right said you can guess, you have to try to guess. It was a game show, and you had to guess the price of the item, and whoever got closest without being over won. So if you were over, you lost. Well, did anybody get fewer than two rate hikes? No. All the people that said 3, 4, 5, they're all disqualified. They're not even in the contest because they were over. Because I predicted 0 and we got 1. So I was the closest without going over. I'm probably the only one that didn't go over. So instead of saying, hey, Peter Schiff was pretty damn close. He thought the Fed wouldn't hike rates at all. They only hiked rates once. Everybody else was looking for all these rate hikes. And again, if you go back to listen to my podcasts for the weeks leading up to the December rate hike. By then, I had changed my mind. And what did I say? I said, you know what? It looks like the Fed is going to hike rates. They've backed themselves into this corner. Everybody expects this rate hike now. They're going to have to deliver. I mean, they'll lose too much credibility if they don't do it. And then what did I say? I said, if they do it, or if they're going to do it, they're not going to do it again. It's going to be one and done. They're going to regret it. The market's going to sell off. They're going to have to reverse course. They're going to have to, and it's just going to be a one-off thing. And that's exactly what happened, right? So instead of trying to make fun of me for getting that wrong, they need to be congratulating me on actually getting that right? Because that's a reason. But it shows you that these Peter Schiff bashers, they don't actually really care. Right? They want to discredit me for anything. They never want to give me credit for getting anything right. So they want to pretend that I've got everything wrong. And the reason I'm bringing this up is if you find yourself in one of these threads and you want to write about it, that was a call that nobody got. Nobody in the mainstream thought that the Fed would only hike rates once, and it was only 1/4 of a point. I mean, it's still practically 0. I mean, the difference between 0 and 0.25 is negligible. In fact, rates are still much, much lower than the 1% rate that Alan Greenspan reduced rates to stimulate us from the bursting of the dot-com bubble and that recession. So we still have extremely stimulative, accommodative monetary policy, much more stimulative than anybody other than me was forecasting in 2014, yet they want to say I'm the one that got it wrong. I got it. I was closer to getting it right than just about anybody else. In fact, even a lot of the other bears, and I had arguments with the bears, they still expected the Fed to raise rates 2 or 3 more times before they stopped. I was the only guy out there that stuck to my guns after they raised once and said they're not going to do it again, even when everybody was convinced that we were going to get a rate hike in June. At that point, I still said, I don't think so. I think the Fed is just talking now. I think they basically did it once, and it was the Hindenburg of trial balloons. It was a disaster, and the last thing they want to do is repeat it. So I've been very consistent on that number. Anyway, let me talk a little bit about some of the economic data that came out towards the end of last week. I think the only real significant data were the inflation numbers and the retail sales numbers. Now, the inflation numbers, at least the PPI number, the producer price number, came out on Thursday. And that number came out higher than was expected. The consensus was for a 0.3% increase in producer prices, and it came out as 0.5. So that was a bigger jump in wholesale prices than the market had been anticipating. In fact, less food and energy, the core rate, was supposed to be up by 0.2, and it rose by 0.4. That was double what the estimate was. And so this was considered to be good news for the economy or for the dollar, because it showed progress, right? If you read all the reports, the articles that were written, it was like, oh, this is good because, see, we're making progress. Because the Fed has said that it wants higher inflation. And so anytime we get evidence of higher inflation, it's considered a good thing because that's what the Fed wants. Yes, we are progressing to higher inflation, but that's not the kind of progress that most consumers would like, right? Most consumers want prices to go down. They consider that progress. If prices go up, that's the wrong direction. Now, when we got the consumer price number, though, that came out on Friday, that number was a little softer because they were only up 0.2% instead of 0.3%. So I guess that was bad news. But the year over year core CPI is now up 2.3%, which is now moving a little bit further above the Fed's so-called 2% target. But the hotter than expected producer price number, and I think the creeping up of the year over year core put a bid into the dollar. And I think one of the reasons the dollar was strong was because the idea that we're finally achieving the Fed's goal of higher inflation means that the Fed is going to be raising rates. At least that is the trade, right? Any evidence of more inflation would cause the dollar to rise or maybe gold to go down because this is going to influence Fed policy. People still haven't figured out yet that it doesn't matter what the inflation numbers are, because the Fed isn't going to raise rates based on the CPI or the PPI. It doesn't matter. Just like the Fed allowed the unemployment number to get way below, the unemployment rate way below 6.5%. That was the original line that they drew, right? 6.5%, then we're going to start hiking rates. Well, obviously that wasn't the case. We blew through that. We went even through 5% before they even went a quarter of a point. But that 2% target, we're going to overshoot that by a much bigger margin than we overshot on the unemployment rate. I don't care how high that CPI goes, as long as the economy is still soft, which I think it will be. And in fact, I think that the increasing consumer prices will act as an economic drag. When the writers are, writing their articles about the higher inflation, one of the other reasons that they think that higher prices will prompt rate hikes is because they believe that the rise in prices is a byproduct of a growing economy, that this is validation that the economy is good because prices are going up. It's actually the opposite. If the economy was good, prices would be going down, because a good economy, a strong economy in the classic sense, is more productive. It means that factories are producing more stuff. And if you're producing more stuff, the supply of stuff is increasing. And as the supply of stuff increases, the price goes down. A successful economy increases supply and decreases price, right? You go from scarcity to abundance, and when things are abundant, they're cheaper. When they're scarce, they're more expensive. So the fact that prices are rising isn't a sign of economic strength, though they pretend it is. They say, well, because it shows that demand is going up. No, it shows that supply is not keeping pace with that demand, right? So, but they want to jump to that erroneous conclusion. But even if it was a sign of strength in the economy, it doesn't matter, because the sign is not going to prompt the Fed to do anything. And, I think the fact that the price of gold still doesn't really sell off when you get those numbers. Now, we did get another number on Friday on the consumer spending number, retail sales. And that came in stronger than expected by quite a bit. And I think that also, put a bid in the dollar and was a negative for gold, because retail sales were supposed to rise by 0.1, and instead they rose by 0.6, although they did revise down the prior month. May was originally reported as up 0.5, and then they revised it to only up 0.2. So in a way, it's kind of like a wash, although we have no idea what they're going to revise the 0.6 to next month. They could revise it a lot lower than that. But again, I would just take any real positive sign here on the retail sales front with a grain of salt, because I think the trend is clearly towards lower sales, certainly if you adjust for rising prices, which retail sales do not. But it's clear to me that based on the economic landscape, the jobs are not there. The real income isn't there. People are still struggling with rising rents, rising utilities, rising food. People have more debt now, whether it's student debt, auto debt, credit card debt, whatever it is. So people are still busy trying to repay for the stuff they bought in the past. And so they've got to cut back on the stuff they're buying in the present because they still haven't paid for the stuff that they bought in the past that they put on their credit cards, or whether it's, stuff that they bought or some kind of college degree that they paid for. So I expect these numbers to be trending down, and the aberrations would be when we get a better than expected number. But then ultimately, whatever better expected number we get could easily be revised down the following month. So why so many people will react to these particular numbers. But given the fact that we did get some stronger than expected data, and they generally pay more attention to the most recent month rather than the revision, right? Which is probably one of the reasons that, we get so many revisions because people know, well, they're not going to care about the number after we revise it. But despite all this, yes, the dollar went up, but, it did soar, and gold went down a bit, but not much. So again, that is showing me, just like the reaction to the stronger than expected non-farm payroll number that we got. In fact, it wasn't just a little bit stronger. It was a lot stronger if you just want to go to the headline number. The fact that gold initially sold off, but then ended up positive on the day, and the dollar, barely caught a bid on that kind of number, shows that the number of people who are buying into this nonsense is getting smaller, right? It's not, everybody hasn't figured it out, far from it. But clearly, there are some people that aren't buying this anymore. There are some people that now realize that the Fed isn't going to hike rates, that even though they claim to be data dependent, the data at this point really doesn't matter. And I've said that all along. The data dependency was all the excuse, because based on the data, they never even should have raised rates the first time, because the data was getting worse. The data was the best maybe a couple of years. If you just wanted to go by the jobs, the GDP, some of the other economic numbers, the point where the Fed should have raised rates was about a couple of years before their first hike. But of course, even had they done that, right, there are people who say, well, the Fed's mistake was they waited too long to raise rates, right? They should have raised rates sooner. No, the mistake was that they cut rates in the first place. Once they did that, it didn't matter when they raised them. Now, the longer they waited, the worse it was going to be, which is one of the reasons I thought they weren't going to hike, which is why they really didn't. Because had they raised rates 2 years earlier, we just would have burst the bubble 2 years quicker. That's all. It's not like the Fed would have been able to pull this off, that they had that little window and they missed it. Had they only raised rates a couple of years ago, everything would have been great. No, everything still would have collapsed. It would have just collapsed, 2 years sooner. Now, the benefit would have been the bubble would have been 2 years smaller, right? There would have been 2 years less of debt or whatever by the time, and it still hasn't completely collapsed yet. But all they would have done is accelerated the pain into the future. And so by now, things would probably be a lot worse. And so politically speaking, it would probably be even more difficult for Hillary Clinton to get elected had the Fed raised rates 2 years ago, because we would be much deeper into this recession by now had the Fed acted sooner. So because they waited as long as they did, Barack Obama and Hillary Clinton can still pretend that we have a recovery, even though it's clear to most voters that we don't, right? That's why, the Republicans are having their convention this week. And that's why Donald Trump got the nomination in the first place. And that's why Bernie Sanders almost beat Hillary Clinton. And in fact, if it wasn't for the minority vote, particularly the African-American vote, Sanders would have beat her. And, if the African-American, if they had actually voted what they actually believed, they would have voted for Sanders. In fact, they probably, if you just took the typical African-American voter and you didn't say Sanders or Clinton, you just described their policies. Like, okay, here's candidate A and here's candidate B. Candidate A is in favor of this, 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 and this. And candidate A was Bernie Sanders. And then candidate B was Clinton. And Clinton is for this, this, and this. If you just describe the candidates, maybe their background, what they believe in, and you just ask typical African-American voter, who do you pick? I bet Sanders would win in a landslide. He'd probably get 98% of the black vote, right? But because they weren't voting for what they believed or what they stood for or their experience, they were just voting for the name. Hillary Clinton, that's who I'm voting for, because that's who the establishment, the leadership of the black community, they were all in favor of Hillary Clinton. And of course, that Clinton is a big name in the black community. He had a lot of support in that community. Obviously, when he was president, he's the name that they all know, everybody knows. And so that's the reason that Clinton was able to win. But if it wasn't for that, Bernie Sanders would be the nominee. And that's because of how bad the economy is. And I think a lot of the people that voted for Bernie Sanders got that. Now, I wanted to make a quick comment, too, on the first controversy already from the Republican convention is Donald Trump's wife's speech, right? And she gave a speech. It's about a 15-minute speech. And a couple of minutes of her speech sound very, very familiar to a couple of minutes of the Michelle Obama speech from 8 years ago. And some of the language is identical, right? So you might find a sentence that's exactly the same, like word for word. But maybe a paragraph is very similar, but not the exact same words, right? Like, you changed a few words, so you wouldn't exactly be plagiarizing it. But some of it was left word for word. And now the question is, why did she plagiarize the speech? And the whole thing is ridiculous because, first of all, she didn't write that speech. She has a speechwriter. So the question is, why did her speechwriter plagiarize the speech that was written by Michelle Obama's speechwriter? Because Michelle didn't write her speech either, right? Some other speechwriter was paid to write that speech. I mean, now apparently she gave an interview, Melania Trump, where she said that she wrote the speech herself. Well, there's no way. You think anybody is going to let her write the speech herself? This is like the most important event, right? The national convention, millions of people watching. She's speaking on the first night. She's got a really important speech. You think you're just going to let her write it herself? I mean, what's her background that she's going to write that speech? I mean, professional politicians don't even write their own speeches. You think Obama writes his own speeches? So why should Donald Trump's wife, right, she's a former fashion model, so she's qualified to write this big, important political speech? Of course they're going to have somebody else write that speech. Now, do you think she maybe gave some input? Sure, yeah, maybe the speechwriter talked to her to try to get some of her ideas so that he can basically put them down into a speech, a very important speech that was going to be meticulously written, right, to deliver the message that the campaign wants. That's exactly what happened with Michelle Obama. You think they let Michelle Obama just write her own speech? Of course not. I mean, I'm sure that she rehearsed the speech many times before she read it off the teleprompter. But when they make a big deal about whether or not she plagiarized, she didn't plagiarize anything. If anybody plagiarized it, it's the guy they hired to write the speech. Now, the question is, this guy's a pro. I mean, why would he go back and plagiarize something from Michelle Obama? I mean, if you're going to plagiarize a speech, at least go back further than 8 years, right? I mean, at least try to pick one that's going to be less well known. I mean, you almost think that maybe this is sabotage. I mean, because obviously whoever did this must have known that somebody would pick it up, unless you think it's all coincidence. But if you actually look at the speech, and of course CNN did that, right? They put the two speeches together, and the segments that were pretty much, carbon copies almost of what Michelle Obama said. Yeah, I mean, but for all we know, maybe Michelle Obama's speechwriter plagiarized some other first lady, but it was just further into the past. And so maybe somebody didn't pick up on it. But obviously, look, this is what the media has to jump on. But nobody wants to acknowledge the whole idea that it's all a bunch of nonsense anyway. This is all a show, right? They're putting on a show. This is a highly scripted piece of entertainment, right? I mean, that's one of the things that Donald Trump does. You think when he does The Apprentice, you think it's all just winged? Of course not. I mean, it's a highly edited program. Yes, I mean, it's a reality show, but all these reality shows are edited, right, to create a storyline that the producers want you to see. They just don't let it happen, right? Yeah, there's a lot of, real stuff in there. They're not actors and actresses from that respect, but the show was pieced together in a particular way. And that's exactly what's going on with these conventions. And it's not just the Republicans that are doing that, the Democrats. Right? This is theater. They are trying to sell us their product. They're trying to convince people to vote for them. And I'm sure that Donald Trump is going to get some kind of bounce from this convention. I mean, the nominee always gets some kind of convention bounce. And I looked at the polls going into the convention, and Trump had gained. At one point he was way behind Hillary Clinton, and all of a sudden he caught up, and he was either even or up a point or two. And my guess is that by the time this convention is over, he's going to have a nice bounce. But the question is, how long is it going to last? And then, of course, the spotlight turns to the Democratic convention, and that's going to be there. But the bottom line on this Milena Gate plagiarizing thing, look, Joe Biden, I guess the plagiarizing stuff never hurt Joe Biden, right? I mean, he became vice president. But, the whole thing is a non-event, and it really doesn't matter. The only thing that might matter is, why did this speechwriter who write the speech, why couldn't he come up with something a little bit more original than just going back? And, of course, most of the speech was not a carbon copy of Michelle Obama's. Of course, a lot of the speech was obviously something that would only apply to Michelle when talking about her husband and his accomplishments and the things that he's done and things like that. But this stuff was woven in there. And, you all of a sudden you have a controversy where no controversy should be. Final thoughts on the conventions. I was at the conventions 4 years ago. I actually went to both the RNC and the DNC conventions. And, I guess a lot of time has gone by because all of a sudden here it is 4 years later, and I'm not going to either of the conventions. And when I went last time, I was still doing the Peter Schiff radio show 5 days a week. So I had a booth there, and I was broadcasting my show from the conventions. And of course, I was able to do a lot of interviews because there were a lot of political guests that were around. And of course, one of the most fun I had was when I did my video at the Democratic convention, which the whole thing was a complete mess. The Republicans did a much better job at organizing their convention. It was much more efficient, and it was a much better experience logistically from the things that I did myself and just observing all the things that was going on. It was a lot more chaotic at the DNC. But where I had a lot of fun is when I did that video where I went around and I asked all of the delegates if they would support this proposition that I wanted to get into the Democratic platform. And my proposition was that we ban corporate profits. And I got all sorts of people who were, yeah, that's a great idea. Let's ban profits. Now, some of the people that I asked didn't want to ban them, but they were willing to cap them. Right? They didn't want to say corporations can't have any profits, but they wanted to limit how high the profits could be. And I had more people that wanted to either ban profits altogether or limit them than who thought that my plan was a bad idea. And in fact, the funniest part about it was the last person. If you haven't seen the video, go check it out. It's my number one on my YouTube channel, the most views of anything I've done myself, that I produced myself. But the funniest part is this woman at the end. She comes up to me, and I've been, saying the stupidest things that I can think of, right? One dumb thing after another, right? I'm deliberately trying to be as dumb as I can, right? And then this woman says to me, you know something? You're the smartest person I've met here at the convention, which is true. I was the smartest person that she'd met, but not for the reason that she thought, because I was saying the dumbest things I can come up with. And because they were so dumb, she thought I was brilliant. And, she would have voted for me if I was running for president. And so I just thought that was hysterical, right? Because that's how you appear smart to a Democrat. Just say the stupidest things that come to your mind, and they're going to think you're a genius, right? Because superficially, that's how they're thinking. And so that's how the whole Democratic convention is going to be. It's about appealing to idiots, saying a bunch of stupid stuff, right? Promising a bunch of stuff for free. And that's how you get supports. Now, to a lesser extent, the Republicans are going to do the same thing, right? But they're probably talking to a slightly more intelligent audience. And in general, too, not just IQ, because there's a lot of Democrats that have high IQs. In fact, I mean, I don't know. Maybe if you took the IQ of the average Democrat, well, I don't know if it'd be higher than the average Republican, but there are a lot of Democrats, there are a lot of scientists, that are obviously smart guys that are Democrats. So it's not really about IQ. Maybe it's about common sense or whatever it is that people who are voting for, for these Democrats, whatever they lack and what's causing them to vote for all this nonsense. But, we're still going to have to a lesser extent, that same type of playing to that low common denominator. In fact, that's one of the reasons that Trump got a lot of support, because a lot of the people voting for Trump didn't actually think through a lot of the things he was saying. They were just mad as hell, and they didn't want to take it anymore. And Donald Trump was their ticket out. He was the only guy that seemed to get it from the point of view of, their own personal experience. And at least they saw in Donald Trump something that was different, because everybody else in their mind was just another politician and nothing was going to change. And Donald Trump at least looked like something different. And at least I still give people credit for at least knowing that we need something different, that we can't just keep doing what we've been doing. And so the fact that people voted for Trump for that reason, in fact, I have some clients that voted for Trump. They're smart people, and they don't care. They're fed up. And in fact, one of the other things I said that I like about Trump is that so many people that I don't like hate him. And the fact that so many people don't like him that I don't like, maybe there's obviously something good about that, right? You have all the people on the top of the Republican Party and the Democratic Party, all the mainstream party hacks who I hate, they hate Trump. So it's like the enemy of my enemy is my friend. And I think a lot of people, too, had that perspective when it comes to Trump. If all these people hate him, he can't be that bad, right? Because the guy that all the professional politicians love, I wouldn't want to have anything to do with that guy, right? I mean, imagine what would happen if I was running for president. All these guys would be saying all these horrible things about me, right? And that would, that's a good thing. Right? You don't want to be the guy that all the career politicians like, all the career politicians want to support, because they want to keep this gravy train going. So Trump represents a threat, but the question is, it's an unknown threat because you don't really know exactly what a Trump presidency is going to be about. But it'll be interesting to at least see how the rest of this convention unfolds. So we'll stay tuned.
Today's financial advisors behave like pro wrestling TV commentators. They scream that the recovery is strong, debt is manageable, inflation is low, and that the Federal Reserve has everything under control. They may be oblivious, but the danger is real. Looking beyond the media hype can open a world of broader investing ideas. Euro Pacific Capital is a registered investment advisor that offers stock-focused wealth management services that closely follow the strategy of our founder and CEO, Peter Schiff. We concentrate on those countries that are more closely in tune with Peter's vision of how capitalism is supposed to work. And these investments are not hard to find, provided you know where to look. Isn't it time you change the channel and let Euro Pacific put a little reality back into your portfolio? If you live in the United States and have $25,000 or more to invest, call 800-727-7922. That's 800-727-7922. Non-U.S. residents access similar strategies through Euro Pacific Bank at europacbank.com. Euro Pacific Capital and Euro Pacific Bank are affiliated companies.